Evercore's Amit Daryanani joins us now. He has an outperform rating and a 220 price target here. So, Amit, let's get right to it. What do you think reverses this downside momentum and brings the stock back to your target of 220?
Yeah, listen, I think there are three things that are going to help Apple over here. One is I do think as they flush out more and more their AI narrative around local inferencing, and very simplistically, we think local inferencing is probably a better way to go about doing this versus doing it on the cloud. It's cheaper, it's faster, it's more secure. To the extent they play that out, that will require you to have 2 to 3 times more DRAM, 2 to 3 times more NAND on your iPhone. So that could actually unlock a super cycle for them. So I think that's one thing, which is, do we get Apple into the AI beneficiary bucket with local inferencing? We think that happens starting in the June timeframe at WWDC. The second thing, candidly, is capital allocation. I don't think Apple is done buying back cash. I think net cash neutral is an intermediate target. I think eventually what they will start talking about is taking leverage on the balance sheet to 2 times net debt to EBITDA, for example, and that could unlock another $250, $300 billion kind of buyback for Apple as you go forward. And the third thing, I do think services is accelerating really well and should offset some of the China worries that investors seem to have right now. So those are the three things we kind of talk about in the note that could help drive the stock higher and why the sell-off is overdone over here.
Also in your note, what caught my attention in that kind of AI bucket is this idea that there's been a rotation from Apple to Nvidia as part of the desire to have more exposure to AI. What does that say about Apple in terms of a kind of safe haven stock? And if there is more of a risk-off posture in the market, does that money flow then back to Apple? Or does Apple need to kind of capitalize and lean into the whole AI phenomenon, and that's the way to get those dollars back?
Listen, we think that's in the near term, the underperformance is probably more driven by asset rotation, right? To your point, dollars going more towards AI names like Nvidia and taking it away from Apple, right? And I think this can change its course in 2 ways. One is you actually put Apple in the AI beneficiary bucket, just the way Nvidia is, and I think local inferencing will get you there. The other would be, to the extent this rally is overdone, there's a bit more of a risk-off narrative that comes about. Apple has historically, for the last 5-6 years, go back to the pandemic time, been perceived as, and has been much more of a defensive name, right? So the 2 ways I think this could work out in Apple's favor is either the market's kind of cool off and it's more risk off, or I think starting the June timeframe when WWDC happens, Apple gets put into that AI beneficiary bucket over time.
Those who are less than positive on the stock would say, all right, but what about growth? It's great. Sure, we'll pay a higher multiple for services revenue that keeps going up. OK, that's good. Return of capital, as you're talking about. What is your view in terms of if you're right about June and the addition of generative AI to the iPhone experience? What's that going to mean for actually buying the 16 when it comes out?
So we've done some analysis on this, and our take is the average iPhone today is pretty darn close to 4 years old right now, right? I mean, the only time people upgrade the iPhone is when it breaks down or your battery life really degrades dramatically. To the extent we think you could have an iPhone super cycle with iPhone 16 with local inferencing, what that would mean if you go and look at the past super cycles is you could get double-digit kind of iPhone revenue growth out of Apple. And if that happens at the same time as services is doing really well, which, by the way, is up 15% give or take right now, that could actually put Apple back into this double-digit growth range. Again, not super high growth, but something a lot better than what people are expecting right now or what we have seen from Apple in the last couple of years.
Yeah.